This is the latest in my series of good news bulletins, and I can't imagine a piece of news that's gooder than this from the viewpoint of the economy and the nation. And that is that the Federal Treasurer revealed today that the cost of the JobKeeper payment over 6 months will not be $130 billion as originally announced. It will be $70 billion, which means a saving of $60 billion for the nation. The not so good news, I suppose, is that we have a Federal Treasury that's capable of making a calculation error that big. I mean, how embarrassing for the federal government to have to announce, oops, we made a slight error, we got it wrong by $60 billion. Anyway, that means the nation will be much less heavily in debt than first imagined, or that if the federal government was willing to spend $130 billion on business stimulus, they have a spare $60 billion to spend on something else. Maybe they could buy Virgin Australia. Now, turning to some real estate market news, there are a number of indicators that consumer confidence is rising, including confidence surrounding our real estate markets. Now, one of those indicators is an analysis by CoreLogic, which suggests that listings of homes for sale are set to rise in coming weeks after pre-listing activity rose 11% in the week ending 10 May. CoreLogic's research analyst Eliza Owen says, with restrictions on open inspections and auctions being gradually lifted, agents may find they have capacity to take on more listings. Owen says consumer sentiment has bounced back significantly over the past few weeks, with May results of consumer sentiment regaining 80% of what was lost in the index over March. And she says, for now, it would seem that people are more confident in selling property. In the past week, the number of newly listed homes rose 12%, while mortgage activity rose by 3% compared to the previous week, a further sign of improving sentiment, according to Owen of CoreLogic. Now, the measure of consumer sentiment that we're all referring to is the Westpac Melbourne Institute Consumer Sentiment Index, which shows that sentiment amongst buyers rebounded in May, rising by 32%, which reversed most of the drop that occurred in April. The index is now only 8% below its average level for the period from September to February, which was before governments imposed their restrictions because of the coronavirus. The rebound in confidence has been seen across all states, led by Western Australia, which is up by 68%. Consumer expectations for house prices rose 5%, a dramatic turnaround after a large drop of 50% in April on that score. Urgent property sales, which means sales by distressed sellers, have remained virtually unchanged around Australia, according to new figures, which suggest that the government support packages and the bank's mortgage holidays have put a floor under the real estate market and reduced the number of distressed sales that might otherwise have occurred. New Domain data shows that most capital cities around the country have only seen a very marginal increase in distressed listings, while in Canberra and Brisbane, the number of distressed listings have actually fallen. And how do we know whether it's a distressed sale or not? The data filters listings of properties for sale with descriptions such as reduced price, mortgage in possession, urgent sale, motivated vendor, or reduced price. I think we said that between February and mid-May. Domain senior analyst Nicola Powell says that despite the huge economic upheaval caused by the COVID-19 pandemic, many homeowners had been able to weather the storm for now. And just repeating the price data that was out earlier this week, which continues to show what we saw with house prices during March and April and in the first half of May, which is no evidence of major decline in house prices, well, not yet anyway. The figures out this week are from SQM Research, which has indexes showing the previous week, the past month, and the past year. And looking at the rolling month figure up to this week, the capital city average is a rise of just under 1% for houses and a rise of 0.3% for apartments. And in terms of house prices over the past month up to this week, there have been rises in Sydney, Melbourne, Perth, Adelaide and Canberra, with Perth and Adelaide both up 1.6% for the past month. And there have been monthly decreases in Brisbane, Darwin and Hobart. In annual terms, every capital city except Darwin has house prices higher than this time last year, and the capital city average is a rise of 10.8% in annual terms, boosted by double-digit rises in Sydney, Melbourne and Hobart. Turning to other market news, the Sydney developer Crown Group has sold $63 million worth of luxury apartments, including 3 penthouses, defying the collapse in sales seen in the broader market. The developer said it was able to close more than $20 million worth of deal in each of the past 3 months, February, March and April. More than half of the total sales were completed apartments, while 48% were off the plan sales. And it says 8 out of 10 buyers were from overseas, including all the buyers of the 3 penthouses that sold during the last 3 months. Crown Group Director of Sales, Precia Edwards, says that the low dollar made the properties more attractive to overseas buyers who were effectively receiving a 14% discount because of the exchange rate. Turning to the latest news about government stimulus measures, local councils will share in $1.8 billion for road upgrades and community projects to help communities battle the impact of the virus crisis. The federal government has brought forward $1.3 billion from its annual grant to local governments from next financial year. A further $500 million has been injected into a new program for roads and other infrastructure upgrades. Prime Minister Scott Morrison says the money will help councils accelerate priority projects to boost local jobs. In Victoria, a road and rail maintenance program will feature in a $2.7 billion building boom designed to boost the state's economy and create thousands of jobs. The stimulus package focuses on what we call shovel-ready projects, including resurfacing roads, fixing train tracks, sprucing up railway stations, and upgrading piers and jetties. There's also 10 new schools to be built and old classrooms upgraded and revamped, and $1.2 billion in education works. And this will deliver space for 21,000 more students and create 1,600 construction jobs. Also in Victoria, a $2 billion redevelopment of land on the CBD fringe of Melbourne, of course, is expected to provide a new pedestrian and cycle link between the city, parks and the Yarra River. 4 bidders, who include Mirvac and Seabush Property, have submitted plans to the state government for 1.4 hectare site on Flinders Street, stretching from Exhibition Street to Wellington Parade South. 3 towers, including possibly a hotel, will be built on decking next to the rail corridor. Now in Queensland, the state has an $80 billion pipeline of catalytic projects on the table, of which $70 billion is in one very big proposed project, which is the SEQ Fast Rail Network proposal. Others include the $2.4 billion Coomera Connector Road project, the $2.1 billion Moreton Connector Road project, the $1 billion Ipswich Rail connection to Springfield via Ripley, and the $550 million Beerburrum to Nambour Rail duplication project near the Sunshine Coast. In central Queensland, economic growth is expected to increase with the latest concepts unveiled for the Rockhampton Ring Road project, which is a $1 billion project funded by the state and federal governments. It's going to be 17 kilometres long, includes a new Fitzroy River crossing to help with flood immunity, and it would be the largest road project in Queensland, supporting close to 800 new jobs. Also in Queensland, the state government has announced $400 million in accelerated road funding for upgrades, new intersections and widening projects, which the Premier says will create or sustain hundreds of jobs. In response to a proposal from the Local Government Association of Queensland, there will also be $200 million for councils to build, upgrade or refurbish community facilities such as playgrounds, swimming pools and libraries, as well as essential services. More small business grants will be available under a $100 million fund, while the tourism sector will benefit from $50 million in support, and retooling the manufacturing sector to provide health supplies will require another $50 million. The state government also has announced a contribution towards the $1.5 billion copper string 2.0 high voltage transmission line in the Northwest Minerals Province. Copper string is expected to underpin the creation of thousands of mining jobs and also industrial manufacturing jobs and stimulate large-scale renewable energy investment. It's a 1,100-kilometre high voltage transmission line from Townsville to Mount Isa, designed to provide cheaper power and turbocharge investment in the Minerals Province. In South Australia, shovels are on the ground in the first of 37 local community projects funded in part as part of the state government stimulus package to support local jobs and businesses. The government has contributed $66 million in funding in conjunction with councils to support local jobs and deliver more open spaces for the community. Minister for Transport Stephen Knowles says building 37 local projects across South Australia is part of our strong plan to support local jobs, businesses and keep our economy strong. We're delivering $1 billion in economic stimulus to keep as many South Australians in a job as possible and support local businesses during this unprecedented global pandemic. In New South Wales, a major energy storage project has been given approval by the state government, with the construction of the Snowy 2.0 main works expected to create up to 2,000 jobs. The project involves the construction of a 240-metre long pumped hydro power station about 800 metres underground. The state government says it will add 350 gigawatt hours to energy storage and 2,000 megawatts of generation capacity to the state's grid, enough to power 500,000 homes during peak demand. And also in New South Wales, the power grid owner Transgrid expects to start construction in a couple of months on a $285 million upgrade of Sydney's electricity network. Sydney's peak electricity demand is expected to continue to grow, due mainly to transport infrastructure projects. It will also supply security, improve security of supply for about 800,000 residents and businesses in and around the inner city when it comes online in 2022. Major new transport projects under construction, including the Sydney Metro Upgrade, WestConnex and the Western Harbour Tunnel, and the recently opened Sydney Light Rail project, are all contributing to power usage. Back to Queensland, plans to build a 2 gigawatt of wind generation capacity in and around Gladstone have been unveiled, with Sydney-based Energy Estate joining forces with the global outfit RES on the major project. The two companies say they're collaborating on the Central Queensland Power Project, which plans to deliver over 2 gigawatts of wind, solar and storage, as well as new transmission infrastructure. The project is separate from the existing and neighbouring Rods Bay project, which is a 300 megawatt solar project that is set to begin construction in the second half of this year by Energy Estate affiliate Renew Estate, just south of Gladstone. The CQP project also builds on the successes that RES has already notched up in Queensland, including the 72 megawatt Emerald solar farm and the 180 megawatt Delacca wind farm. Still in Queensland, new legislation has been introduced to the Queensland Parliament to push a mega wind farm to be built near Maryborough, closer to reality. $2 billion Forest Wind project will be the largest wind farm in Queensland, although they all claim that, but it does sound very big at $2 billion. It will create up to 440 construction jobs. And the first new homes in one of South East Queensland's largest future suburban areas may start happening soon. For over a decade, Caboolture West has been earmarked for future residential development, but not much has happened to date. Because development is seen as a long-term prospect over perhaps the next 40 years, eventually housing up to 27,000 new homes for about 70,000 new residents. But things are happening faster than expected. There are currently 2 applications lodged with the council, which are proposing a total of 1,000 new homes, and a third much larger application from AV Jennings with scope for 8,700 new dwellings on 410 hectares of land. Back to South Australia, where BHP plans to lift copper production at the Olympic Dam mining project by 70% over the long term. And that's advanced with the state government releasing its assessment guidelines on the staged multi-billion-dollar investment. The Olympic Dam mine, which is about 560 kilometres north of Adelaide, has produced 124,000 tonnes of copper in the year to date. BHP wants to increase that to 350,000 as part of the Olympic Dam Resource Development Strategy, which is a $3 billion project, which was granted major development status by the state government last year and is expected to support 1,800 jobs in construction and 600 ongoing jobs. Also in South Australia, the prospect of a $400 million residential estate as part of Morphettville Racecourse is a step closer, with the state government rezoning the land to allow for housing. The South Australian Jockey Club has announced that its development plan amendment has been approved, paving the way for the development that includes 1,000 homes in apartment buildings up to 12 stories high. So once again, there's no shortage of good news around the nation, with plenty of positive events in real estate markets and lots of new measures from government to stimulate economic activity and jobs. And of course, that rather startling news from the federal government that the JobKeeper payment to businesses is likely to cost only 60 billion, not the 130 billion that was first thought. Bye for now.